Good afternoon, welcome to the TheoTrade afternoon video. I'm Blake Young and today is July 31st, 2025. And today I want to look at a sector that maybe we're not paying enough attention to. This is the last week where we have the mega cap stocks breaking out and we have surprise earnings results from Meta and Microsoft and shock and awe type of movements in the tape. And yet we look at the sectors this week and the performance of the sectors versus S&P 500. And you can see that pretty much all of the sectors are negative. All the way down through here. We've got everything except for one, this outlier that's done 2% this week up despite the rest of the market falling. And so you might think, oh, let's chase the big tech stocks. Let's chase the big moves. And reality is that's not what we want to do. And I'm going to show you why and what I'm really interested in today's movement and this week's movement despite what we've seen going on in the mega caps. In fact, if we were to look at this chart and go through and say, look at this chart and look at the strength of this movement, would you be able to tell me, if we look at this sector specifically, who this is and is this a consistent enough return for you? If we see this prices going higher and higher and higher on an ETF in a sector, would you look at this and say, yeah, that's pretty strong. This is pretty stable. It's not showing the same weakness as the S&P 500 is. It's not showing the same slowdown near the top. It's consistent and had solid growth today. It might surprise you that it's not tech stocks, it's not communication stocks, it's not the mega caps, it's not part of the FANGs, it's none of those stocks that we normally would have expected or the ETF that would represent that. In fact, it ends up being one of the most conservative ones of all, which is utilities. So utilities are continuing to climb and have rallied from 72 to 86 in the last 4 months, which is causing the utilities to outpace every other sector in the S&P or the S&P 500, every sector here, by 6% in 3 days. And so we're seeing massive recovery, massive growth in utilities despite the fact that everything else seems to be downtrending. This is a flight to safety. This is defensive. But not only is it defensive, it is defensive that pays you a good dividend. So it becomes a dividend stock that mirrors and is very close to getting paid like you would for bonds, but it's growing unlike bonds. It is reaching new levels and trying to get to a new 52-week high as everything else is fading. So if we take a closer look at utilities and that utility sector ETF, not only could we treat this as the highest close that we've had this last 6 months, but we could go into the trade tab and say, they do pay a good dividend of 2.6%. But we don't need to stop there because utilities, the sector, is pricing in some stocks that have even higher dividends. If we take a look at the individual stocks inside and looking at the market watch, you can see a lot of green here, and NextEra and Southern and AEP have pulled back, but there's a lot of green in this chart today as we're pushing up to these record highs. Looking at the individual stocks, we could go through and look at the individual stocks and look at the price action. AEP post earnings is doing great. It's gone from 98 to 113, so gained 10%, and it pays a 3.29% dividend. We could take a look at CEG, and again, we could go through a lot of these new record highs or new annual highs here, and CEG pays you a smaller dividend, so I don't know if I want to chase that one for the smaller dividend, but still a very positive move in Constellations. We could look at Southern, which has been selling off after earnings, but has done pretty well for the year. After earnings pulled back a little bit, it might be a discounted price to buy. We could go through, and like I said, there's a lot of stocks here that are worth looking at inside the space. 52-week high breakout on Xcel Energy also pays a 3.1% dividend yield. We could look at SRE pulling back through there and then breaking to this, not record highs, but certainly into an uptrend, higher highs, higher lows. Be aware dividends are coming up. And the returns on these are pretty decent. We're talking 20-25% returns in 4 months and also paying a dividend of 3%. So there's a lot of stocks inside of the utility space that are paying good dividends, breaking out, moving higher, so you get both the appreciation of the underlying and get paid a sizable dividend if you're holding it for a longer term trend. Now the question is, do you want to take these trades that are breaking out and going to new highs like PEG, where they pay 2.8% and trade it at the top level, which I think that's a good trade there too, or Dominion, like we already looked at, 4.5%. It doesn't have to keep going. It just has to pay you that 4.5% and melt higher would be fine. Or do we look for the ones that are discounted a little bit, pulled back to a key level that we might want to step in, where we still have room to go higher while also getting a high dividend. So we have Exelon, EXC, that also pays a 3.5% dividend. And if everything else is going up to their 52-week highs, could we see Exelon go back up to its 52-week high at 48, gain 10% on the stock while also paying that 3.1% dividend? If we can get dividend and the target and sell covered calls, we can kind of double or triple dip on these things as they appreciate in value, pay the dividend, and collect those covered calls. Duke Energy is another one that we could look at. Duke Energy still has some upside to get back up to its previous high. Not as much, but still has some opportunity to grow just to play back to the highs while they are paying a 3.5% dividend. One of the ones that is giving you a little bit deeper pullback but might be a discounted price for a good dividend is a stock like Nextera. They reacted pretty harshly to the dividend or their earnings, but it still seems to be holding up in this trend. So for me, it could be just as well that we're going to go back and retest the high of 10%, and they pay a 3.19% dividend. So if it doesn't go higher and sits there sideways, this is a discounted price to give you that 3.19% dividend. And so my list, if I were to line it up, I'd say Nextera and Duke and Exelon and Dominion are probably the ones that I like the best here. Or again, just floating back and saying, well, rather than buy individual positions, I like the idea of just getting into XLU and collecting that 2.5 to 3% dividend here while we continue to move higher and higher with that diversification. Not a lot of risk here, and if we are going into a flight to safety, if we see utilities are the top performing sector across all sectors this week, including all the lift that we got from Microsoft and Meta, then that's saying something. When the juggernauts who completely blew the doors off their earnings can't lift it more than what utilities have done, that is telling you something about utilities. We are absolutely seeing a flight to safety and to these dividend type stocks or sectors. And so utilities are probably my favorite thing to look at this time. That could also be a sign that we could be looking for discounted prices into stocks that are healthcare stocks and consumer staples. But we'll stick with it with utilities this week, and we'll see if XLP or consumer staples and healthcare come into vogue by next week, as we see a continuation of this flight to safety. Now, it could be partly because we're dealing with the deadline going into tomorrow for the tariffs, and we're not done. So it will be interesting to see if we have a delay across the board or if we have enough deals done that we're not concerned anymore. But again, good dividends, good trends, upward trending, potential for covered calls so we can triple dip into the stocks that are in the utility sector. That's going to do it for me today. Thanks for watching. Join us again tomorrow and have a fantastic night.